It's recorded now. So I'm going to share my screen. We're going to get started with the lesson. We're going to be teaching you on the difference between passive and active investing, the difference between passive and active investing. Again, when you are investing passively, you're trying to match the performance of an index. We told you on last week an index is a tracker. So it tracks a group of stocks and their performance. So we told you about the different indices like the Dow 30, which is usually the top 30 performing companies in America, the S&P 500, which is the we call the market, which is the top 500 companies in America, usually companies that you've already bought, you already consumed, the McDonald's of the world, the Amazons of the world, the Targets of the world, the Walmarts of the world. It's those companies. And then the NASDAQ 100 is what we call the tech index, which usually tracks some of the largest technology companies, right? So diversification is important when you are a new investor because you never want to put all your eggs in one basket because you never know what's going to happen in the economy, right? If you invest, let's just say today you would invest in a real hot technology stock and you put your whole income into that. Well, this company is growing. You don't know what can happen. There could be one bad situation that maybe they don't have the right chips, or maybe their service is not good as it needs to be. Maybe they have a glitch in their technology. So if you just invest in one company, right, you can lose all of your money by investing in that one company. So having a diversified approach, and diversified means just don't put all your eggs in one basket. Y'all heard y'all grandmothers say this. Don't put all your eggs in one basket. And I love really teaching these seminars because we don't have to talk corporate talk, Brother Darius. Today, we can literally talk to our people how we like to talk. So
Mhm.
basically, this passive investing strategy basically just matches the performance of a benchmark index, right? It can be any index, it can be any type of sectors of business through a diversified approach by buying a bunch of investments, putting on a weighted index, and then from that, you're able to track your performance by how a fund has bought all these companies. Brother Darius, do you have anything you want to expound on that on passive
Yeah,
strategy?
yeah. I just want to add, with these indexes, as you can see, with the S&P 500, it's scheduled to go up 8 to 12% a year. So if you're not outpacing that plus inflation, you're really not gaining any wealth. We know that the Nasdaq has gone up 17% over the last decade. So these are different indexes that help you gain wealth, also outpace inflation. That's all I want to add.
Yeah, and that's powerful. Like my brother said, inflation is really going to be your biggest threat to wealth creation, right? Because as the country is pumping more money to the economy, that means the dollar that you used to have doesn't have the same punch that it has, right? It doesn't have the same power. We all know if you're a 90s baby like myself, like my brother Darius is, like you already know the $100 that you used to get when you were a teenager ain't the same $100 today. I've been in the movies a couple of times and go to the movies and get some popcorn and some nachos or chicken, um, like chicken wings. It might be $100. So you're starting to see really your purchasing power really going down, and you have to do something about it to really fight that, right? And that's why I'm always on y'all real heavy to really start now because the best time you have is right now because you have that opportunity cost. So the difference between passive investing and active investing, we call it the stock picker. So usually these are corporations or funds that actively manage the investments. And what that means is they have some high profile, smart people that go in, right, and sell stocks and then buy another strategy or another company and buy a new stock. And they're probably in the short run, are going to get more explosive returns. So the difference between passive and active Is one fund like an ETF company just buy a bunch of stocks in a sector of business or on an index, and they just leave it there on a weighted average. And then with the active strategy, they're buying and selling stocks all throughout the year. They're reducing their exposure or increasing their exposure to certain stocks all throughout the year, which the reason why they're doing that because they want to outperform the market, right? Because if they outperform the market, if that funds outperform the market, what happens is they get paid more fees. More people want to invest with that fund. Then they get on the news like CNBC or Bloomberg, and they get to talk about their fund because they have an accurate strategy that performs better than the index or the passive in strategy. And how many know everybody wants to make more money? So active managed strategy has the goal of outperforming the market, and they do that through special research, right? They may have a niche of seeing certain companies that everybody doesn't have, using certain technology, going in with financial analysts and finding out about the products and services of that company. And then they create a strategy based on that and stock selection, right? So passive investing focused on long-term growth and diversification, putting your money into different pools, into different baskets, while active investing aims, they want to beat the market through that active strategy. So by picking, they might say, okay, we want to buy 50% of this stock, and then we're going to have, 5% of the rest. With passive, they're just going to say, we're going to have 4% of every stock. We're going to buy 4% of it until they get to 100%. And so that's basically the strategy between active and passive. Brother Darius, you got anything you want to expound on what we just said here?
Yeah, I was just going to add the fact that it's just some people in that in arena. So we all known me and Liz know there's 11 different sectors in the U.S. United States economy. So within that each sector, you might have an ETF that will cover that. We might have a ETF that covers commodity, a ETF that covers energy, a ETF that covers, and now you have crypto ETFs and stuff like that. So these are ran by specific financial firms and stuff like that. I want to say during the 2020, you know, the economic wave of 2020, everybody was following Kathy Woods because she got a real high return on her hedge fund because she was invested in a lot of technology. Her name just started to pop up everywhere. Like you were talking about, she started to get the interviews and all that stuff on TV, but she was able to outpace, the 12 the 8 to 12% that is, the industry standard that most people want to get a return yearly on their portfolio. So once you learn about the different ETFs and the ones that outpace the S&P 500, like Lucas said, you'll be able to outpace and add a investment to your portfolio that's outpacing the S&P 500, which was actually gaining you wealth.
Yeah, that's very powerful to really unpack what you just said. It goes to really a mindset about you being an investor. And I want everybody who's listening to me right now, because we're about to go into another caveat. You got to really start thinking about you being an investor and really wanting to know what your goal is. Darius and myself is only here as tools to really help you, but they might be a sector of stocks that you know about. Some of y'all are working in some Fortune 500 companies. Some of y'all have ears to the streets and y'all know what people like to buy. Some of you are women and y'all, you consume products every day. So there might be companies that you might know about that you have a niche mindset about, niche understanding about, and you got to really start thinking from being a consumer to an investor. You already know how this company, right, tick because you buy their products. But now think about that in an investment mindset because, like Darius said, you could be a great active investor by buying companies where you know how when they're going to make the most money, like a Victoria's Secret, like a Alo or a Lululemon. If you know they're about to drop new products or they're about to make new money, so please start thinking of yourself as an investor and think about benefiting your future first before you pay anybody else, any other corporation, any other business. Pay yourself first. And one of the simple things about an active strategy, just look at the returns of MSTX. We had all you buying, which is the 2x leverage on micro strategies, which he has a huge exposure to Bitcoin. Some of y'all have already made 40, 50%. Some of you 60, 70%, which is crazy returns. Like Darius can tell you why I have one line. Darius, please tell them how explosive a 70% return is in a month and a half.
Oh, 70%, that is like I said, that's almost unheard of, unless you know what you're doing investing and like you said, leverage investing, you can definitely outpace the normal industry standard, which is 10% a year. But if you're getting 70% a month, you're going to have people want to want that information, and it's going to be high demand. If you're able to give people those types of games. So uh, Leonard getting you guys 70% in a month and a half, that's amazing. That's
Yeah,
that's $1 million, that's $1 billion information.
yeah, I mean, and we're talking to a man like this man is not a novice. That my brother Darius Green has made hundreds of thousands of dollars in trades, especially even in the crypto market. He knows what he's talking about. His analysis is some of the best analysis that I've ever seen in my life. So when this man is saying this, please let you know. I want you to know that when you're earning 30% and 40%, like we're always looking at how can we get 10% or 15, and you guys have killed it. So just know as an investor, you guys, even with small money, like if you put 150 in and you made $100, you made a lot of money. And just understand that if you had a million, if you had a million, you would have made $710,000. You could have possibly retired. So we just want to let you know about that. Okay.
Yes, definitely.
So yeah, yeah. Definitely, definitely. Yeah, you had anything else you want to share right there? So I didn't want to cut you off.
No, no, that's fine.
Okay. So talking about passive investing, right? So passive investing typically involves low cost index funds, we told you, or exchange trade funds. And the beauty about that, they have lower fees. We call it cheap beta in the financial world, because active investing has expensive fees. Like you might have to pay 5% a year, right, to active managed funds, right? So diversification, right, with passive investing, it creates strategies that provide broad market exposure, right? And you need that market exposure because as an investor, you always have to think about risk. What is the risk that I'm taking for investing in this asset? And if you're going to take more risk, you need to receive more reward, more return for the risk. So a passive strategy, even though it may not make more money in the short term as an active strategy, it is going to significantly reduce risk through costs, and it's going to reduce risk through exposure because it's going to let you invest in a wide range of stocks. Securities is just stocks, right? Or commodities. And when my brother Darius was saying commodities, a commodity is just something natural or raw. So a commodity would be something like gold, oil, wheat, coffee. And people buy, sell, and trade that because these things are needed to make other products or power our economy. We know people need coffee. We know people need oil. We know people need silver and gold for jewelry and all kind of other things alike. So that powers our economy, right? We talked about lower risk, right? So passive investment strategies usually have a lower risk level or profile because all they do is track the performance of a broad market of stocks rather than trying to outperform the market. So they track the market, which means they flow with the market, right? The market makes 20%, you're going to make 20%. You're not going to make more than the market. You're going to make what the market makes. And so, that's basically market matching returns, right? So it aims to match the performance of the overall market rather than trying to beat the market, which is a challenge. To try to beat the market, as my brother Darius knows, isn't a challenge because the market has a mind of its own. Because even though the markets are efficient, my brother Darius already know people are irrational. Tell them a little bit about how it is investing in the markets and why you need to have somewhat of a diversified strategy.
Yes, I would say just a long-term investing is the best and the simplest way to, end up with wealth in that exit strategy that most people want. If you look at people like Warren Buffett, he's not trying to day trade. He's not trying to get in and get out the market. He's a person that works with the market, uh, tries to get what the market is going to give him. He doesn't overshoot his position. He just takes it slow and simple. And when you're thinking like that, instead of I know Leonard talked to you guys about what happened with the tariffs and stuff like that, and how it affected the market. If a person was over leveraged and they were just day trading and didn't really pay attention to the tariffs, their portfolio would have got wrecked, just by being over leveraged in one thing instead of having a diversified portfolio. The diversified portfolio makes your life easier as an investor. You don't have to worry about if the market's going to go up or go down in one day or not. You know that the market is pegged to go up because that's just how it goes. The market exists over 100 years. It's never went back to zero. It's always gone up. That's all I had.
It's simple as that, my brother. It's just, and you have to really start looking at the market as groups of businesses who are going to continue to make more money. A business job is to make more money. How can we make more money this year than we made last year? How can we make more money next year than this year? So if you know that a business job is to make more money, that's why the stock market goes up. One of the reasons why more money is coming into the economy, right, through capital injections, right? The federal government prints more money, which means there's more money in the economy, which decrease the value of the dollar, but it gives people more money in their pockets to do what? Spend. And when people spend, they love to spend on household items. So that's the mall. That's a new car. That's redoing their apartment or their house, putting new furniture, getting that 90-inch big screen TV when they don't need it. And so every time somebody spends, a business is going to make more money. And if you know a business is going to make more money, the key to that answer is why you're not buying stock in that business if you know that business is going to buy money. When people have more money in their pocket, they're going to spend. That means that business is going to make more money because they got to spend it with a business. Simple as that. So active investing basically is about a strategy to generate large returns, right? We talked about Kathy Woods. You can look her up. She has a company called Art Fund. I've got a chance to meet Kathy Woods when I was in San Francisco. Very nice lady. I'm actually possibly this year going to meet her again. And had a chance to talk to her about a global macroeconomic strategy where she has a time horizon of 5 to 7 years. I won't get into much of that, but if you guys have questions about that, we're going to take questions in about 3 minutes so everybody can really get an understanding of what we have here. And while I have Darius here, I definitely want you to be able to tug on him because this man knows a lot about finance. So yeah, active strategy wants to generate returns. It wants to make money for you because with active strategy, there's a lot of competition. Everybody wants to beat the market because everybody wants to make more money. So you will see these companies like ARK, you see these companies like Apollo, Global Management, BlackRock, Blackstone. All these companies are, VanEck, iShares. All these companies are companies that have, a passive strategy and an active strategy. And the active strategy is to make more returns, but we told you it comes with more risk. So you need to really research if you're going to invest in an active strategy fund or active investing fund, because they're going to try to generate higher returns by researching, analysis, and really selecting individual securities. When Kathy Wood started ARK in 2020, like my brother said, there was a lot of money in the economy, right? We had quantitative easing. We call that easy money, right? The government provides capital injections to the bond market, right? And when there's capital injection to the bond market, it reduces interest costs and it makes people want to spend more money. So when that happens, that's usually good for stocks because people, we told you, and start to buy businesses. But when there's situations like today, quantitative tightening, when there is money being restricted out of the treasury market, out of the economy, there's less money in people's pockets. And these particular high explosive active investment funds are not doing so well. So if you look at it right now, a lot of these companies have over a year to date average are not doing good because they were high explosive growth companies, high explosive growth funds, excuse me. So in order for them to be successful, they need to have in-depth research, in-depth analysis. And how many of you know that these people can be wrong? They can be wrong all the time. Me and Darius work in this sector of business. These people can be wrong. They can guarantee potential returns, as we can see. If they're successful, they can make more money. But when they are not successful, your portfolio can go flat. So that's the challenges of a really operating in the active investment market. It carries high risk, and the success of the strategy depends on who's managing the fund. And if you got some of these guys who don't know the difference between risk and beta and all these different terminologies that we know, they'll just be buying anything. And really their performance on their fund could be flat for years. And Brother Darius, I just want you to kind of simplify. Maybe I was probably talking a little bit too crazy. So simplify that so people can kind of understand what we're talking about.
Yes, I like what you're saying. Even when it comes to the just the idea of being an investor, a lot of people told me, and some of my family members, that they asked me why was I getting out the military, and I told them I'm an investor. Um, so I adapted that personality that a lot of people say I'm an entrepreneur. I'm an entrepreneur. I was telling people I'm an investor. And when you know what you're doing and you have that mindset, you can achieve what you want to achieve. And like he's saying, it's all about risk. Your ability to handle risk, and not over leverage yourself, listening, and listening and doing your research, because yeah, research pays off. I was doing some research earlier. They said by the end of 2025, there's projected to be 28 million millionaires in the United States. Most of those millionaires are millionaires through their IRAs, 401ks, their retirement portfolio. And most retirement portfolios are strategically diversified. So diversification is the way that can get you to being a millionaire. There's 28 million people. There are examples of that. And and what Leonard is giving you guys world class information at the highest level. I'm here to kind of break it down in simple terms, but if you listen to this information and then you put it to action, you can be one of those 28 million millionaires.
And Darius really is talking like, even though I know some of you might not take really the present of this moment, we're giving you free game for what we had to pay tens of thousands of dollars for, even hundreds of thousands of dollars. And I'm not just lying to you. There's a conference that I'm going to. There's some conferences that me and Darius are going to that cost 1,000 to get in. There's a conference that I'm going to this year. It's if you don't have 8 bands, you don't have 8,500, you're not getting in. And the ticket that I got, if you don't got 35,000, you're not getting in. And information is the biggest currency that you have as an investor. So as we're sharing this information with you, I just want you to know that we're really doing this because we have a passion for this and we really love y'all because we want to really let the next generation of black people, but not just black people, just young professional people to really understand that yes, you can buy the Goyards, you can go buy the Louis Vuitton, you can buy all that. None of that's worth the real price. Goyard costs $150 to make. Darius know that. Louis probably costs $86 to make. And it's really just a mindset situation. Really,
Oh yeah,
we
yeah. So I lived in Europe for 5 years. 5 years. Most Europeans are not even wearing those clothes. Most Europeans can't afford those clothes. So when it comes to the lifestyle, you should get the money first. The lifestyle is definitely going to come.
100%. And then again, if you know how to invest, you can really use the principal of your investment to buy your bag, go buy your clothes. And that's what I do. Like when I go do a vacation, I just invest. And then by the time that year comes, I ain't got to worry about like hurry up to get back home to work because that money was already accounted for. So it's just really like planning for the future that you want to live in. I know we live in a situation, and I'm not trying to stop nobody from living the life that they deserve, want to live or whatever, but it's really just thinking differently because there's always going to be winter, like any season. There's always going to be times when you up and when you low. And when you low, the lows can be super low. So you got to protect yourself. And I not to get too biblical, brother Darius, but one of my favorite scriptures is money is a defense. Man, when you got money, I tell you, it protects you. And not only that, it just gives you a better quality of life because ain't nobody can tell me that a sirloin tastes better than a ribeye. It does not, or I'm just saying certain quality of life. You can't tell me about 2,000 thread Egyptian cotton sheets feel the same way as 200 thread count sheet. It don't feel the same, right? So yes, we want y'all to have money, but we just want you to think as an investor first. Don't consume your money because no matter how strong, no matter how powerful, no matter how smart you are, or no matter how savvy you are, no matter how beautiful you are, whatever way you make your money, you will get old and your hands will not be able to do the same thing. Your mind won't be able to be as sharp. You won't be as beautiful as you are today. You've got to think differently. And we're just coming up with strategies so that you'll be able to. So the next 10 minutes, we're going to talk about this, and then we're going to just have a real in-depth think tank that we're going to tell you, me and Darius, we're going to tell you like what's happening in the macroeconomic scene and how you, an investor, can protect yourself from what's going on and really get some gains. So we're going to talk about that. We're going to give you a real in-depth. And at that time, we're going to open up for questions. So in about 10 minutes, y'all going to be able to ask us as many questions as you want to ask us because we're in this space every day. So we told you that actively manage investments, research, trading. They're trying to outperform the market. They're trying to time the market, right? So they try to buy stocks at optimal times. They might see a stock go down 40% and say, okay, we believe this stock will go up 60%. So we're going to buy the stock right now at 33 instead of buying it at 40 because we might can make another 3 to 4% on the stock. And then they use techniques like fundamental analysis. Fundamental analysis is just a very deep term on trying to look at why is this company performing the way it's performing. Okay, it's making $100 million this quarter. Okay, it's going to make 300 million the next quarter. Oh, that's 200% increase in revenue. Oh, this might be a company that we need to look at. So looking at all those factors, right, to identify, is this stock fairly valued? Right. So if it's trading at 33, is it really worth $33? Should I pay $33 for it? Is it undervalued? So it's trading at 21, but it's worth 33. So I can make another 30, 40% on it. Or is it overvalued? Am I paying too much for the stock? And that's basically what an active strategy is. So passive investing is basically, give me a second here, is matching the market. So trying to achieve the same returns as the overall market and invest in a diverse portfolio of stocks or an index fund. All it is, it's like what we're doing, a buy and hold strategy. I know a lot of people today, my brother, don't like buy and hold. They want to make that quick, fast money, And again, now this might be an unpopular opinion. Stop trying to hustle. You're not a hustler, you're an investor. If you try to hustle, all you're going to be able to make is what your hands is able to make. Just think about a hustler. I come from the lower ninth ward, so I've seen a lot of hustlers in my life. They got to be on the street corners from 6 in the morning when the morning fiends come in all the way to the night. That's a lot of work. You are an entrepreneur. You are an asset owner. You are an investor. And what investors do, they let their money make for them. They don't make money. They let their money work for them. And that's what you got to do. Use your income that you're making to invest in assets that is going to make tremendous amount of money for you over time. Stop trying to get it fast because money is supposed to chase you. You're not supposed to be chasing money. If you chase money, you're going to be sick. You're going to spend too much time on it. You're going to have headaches. You're going to have all these type of chaotic situations because you're out here chasing it. And when you are chasing it, you're going to blow it fast. But if you have these habitual efforts to continue to gain it, like this buy and hold strategy, you're going to have the mindset. And when you have the mindset, see, me and Darius, we didn't lost 30, 40, 50, 60, 70 grand, 80 grand. I lost like almost 30, 40 grand in one day. And Diamond can tell you, she's like, you all right? I'm good. I'm drinking a coffee because I know I can get it back. And so that's how you got to think as an owner. All it is money. You're going to get it back. Like companies are going to make more money. As an owner, you're going to make more money. And that's what an investor is, understanding that businesses are going to make more money. And my brother Darius, anything you want to share with that? I definitely don't want to leave you out.
Yes, and the idea of investing the amount of money, you could start off small. Like I know a lot of people, they have the idea of, well, I need this amount, I need that amount. Investing starts with your daily actions. It's as simple as not doing this instead of saving the money, and then using that money you save to invest. But like you said, like I've lost money. I've lost five figures. I've made six figures. So I know uh, people don't want to lose, but everybody's lost in this game, especially if you know if you're just starting out. But we are here to help you guys not make the same mistakes.
Yeah, yeah, yeah. We already we already been on that. Easter just passed, but we already been on that cross for you. So that you are able to really kind of like get the fluff out of it. So when we just want y'all to have wins already. So when we give you like strategies, just know we've done the analysis, the research to give you the wins and to really open the door so that you can build the habits so that when you don't need us or you use our strategies and you really implement it for yourself, then guess what? You were like, you know what? I got the habits already. I didn't build it. I didn't invest it for 2, 3 years consistently. I know what the market is going to look like because Darius can tell you as you keep investing in the market, you're going to understand the market cycles, and you're going to know when stocks are cheap. You're going to know when to invest. It takes some time, yes. That's why we have these training modules for you to help you. But it's going to take some time. Yes, there are some complicated terminologies that really don't really mean nothing. I don't know why these people always have these crazy definitions. But it really don't be meaning nothing really for real. And Darius can tell you it don't be really meaning anything besides a very simple the definition. But I guess they probably did that to try to limit our people from being in this market. Um, so passive investing, low cost fees, matching the market, buy and hold strategy, and diversification. That's what you get with that without having to have the maximum effort. And so that's a good thing. You don't want to have that maximum effort. So 10 income for passive investing. You're investing for the long term, right? We told you the passive investor strategy works best 5, 10, 20 years. You're buying the whole market, right? So you're buying hundreds of companies at once. They usually keep costs low, right? So let's say you got $100,000. All you're really doing is at the end of the year, you're giving them $200 back. Now you might make, 20, 30 grand and you don't get a company $200 compared to active manager when the basic fee is somewhere between 3.75% and 5%. You got to be consistent. Right? We told you about being consistent. You got to invest regularly. We want y'all to invest every week, right? No matter what the market is doing, no matter what the price is, the price is going to figure itself out. Darius can tell you today's price is always going to beat tomorrow's price every day, consistently. Ignore what's going on in the headlines. You're going to hear a lot of stuff. You know, a company is good. Keep on investing in them. you know, and try to own some international stocks. One of my favorite stocks right now is I got some Sweden, I got some stuff that's going on in Hong Kong. They got a lot of ETFs because that gives you a diversified strategy, right? So we're gonna teach you a little bit about that. I'll tell you to hold off for that until we can show you how that works. And then you can use automatic investment tools, right? Auto deposit. right? $20 every week, so you don't even have to worry about it. You making your job is to go to your corporation, you to make money, and then bam, you know, it's already on my automatic investor. Sometimes, you got to adjust your portfolio balance. Sometimes, like in a time like this, for a short term, you might have to buy some bonds. Now, I told you, bonds is only for capital preservation. It's only to try to keep what you already have. You're not going to pretty much outpace inflation because inflation is like 2.7, 2.8%. Average bond right now, 10 years, about 4.1 to 4.3. So you're only going to make like 1% per year, but it's really just to keep what you already have. Focus on time, not timing. Stop worrying about what price is good. It's better to spend time in the market than trying to time the market. And I know I'm not the most patient person, but when it comes to investing, it has taught me a lot about being patient. Be patient, because I promise you, everybody that's day trading, you're gonna make way more money than them. Because they're gonna lose. They're gonna lose. But if you hold your stocks for 5, 10 years, you're not gonna lose. And my brother Darius knows about that. Anything my brother you want to share with this?
No, I like all those principles. These things are simple and like I said, ignore the distractions. There's going to be a lot of distractions. There's going to be other people trying to get you to day trade and stuff like that. I would say all my friends that started with the day trade and stuff, I've kind of outlasted them just because I, I I did what was simple, and I knew I wasn't going to make my retirement in one day. In the future I will, but I knew where I was starting at as a young guy in his mid 20s. I wasn't going to make enough to retire in one day, so I didn't see the need to start the day trade. But all these are great principles to follow.
Here are the 10 principles for active investing. You need to have a clear strategy, right? So what type of sector or business you're going to be investing in, whether it's growth stocks like technology, whether it's value stocks like food or energy, whether you're going to be buying short-term trading instruments. There's some derivative products that deals with option strategies on ETFs. You got to find out what you're going to be investing in, because active investing is more of a niche market. So it's only a clear sector. Energy, technology, consumer discretionary. All consumer discretionary means is you're investing in it's basically when the consumer has extra money. So that'd be like theme parks, it'd be hotels, it'll be airline stocks. That's what consumer discretionary is. Study the companies, like find out what these companies are doing. You got Twitter, you got Threads. That's one of my favorite social media. I'm always on Threads. You have all kind of YouTube. You can go look at everything. Find out what the trends are before you're investing. If you're investing in LVMH, find out when is the time that they're selling the most bags. All these different things. Watch your costs closely. It's a lot of fees. Those fees can kill your profits. Be selective. Remember, there's some risk. There's risk to everything. People always say, I want to buy stocks, I want to invest, but I don't want to take no risk. There's a risk to everything in life. Even if you don't buy stocks, the risk right now is that your life is going to be way more expensive in your future than it is right now. So just understand that. So protect your money, right? So if you see a lot of volatility, set some rules to sell. If prices fall too much on the active strategy, sometimes you want to cut fast losses than long-term losses, right? We told you again, be objective focused. Don't get emotional, right? If you know a company is going to do something, right? It's going to take a year. It's going to take 2 years. It's going to take 3 years. I told you about Facebook. I ain't even get a profit until probably like the third year on Facebook. But that was a nice six-figure trade, and they got their earnings tomorrow. Adapt. As an investor, be ready to adjust strategies based on information. Know where you have knowledge. Ladies, y'all know more about buying consumer products than men. If you know a company and you know how they tick, like a Forever 21 or Macy's or a Saks or whatever, Target or whatever, buy the company. Please, Victoria's Secret, buy the company. My favorite company that I buy, I got my Starbucks shares. I always tell you about that. Listen, I love them. I can't even sell them. They did horrible on earnings today, but it's okay. I bought it at a very cheap price. So it's just one of those companies I keep on building and building and building. And really no one, if the strategy that you bought, it's okay that if your strategy has not worked the way that you want, no one to step back. If this active investing strategy ain't working for you, shift, move to more of a passive strategy. Because again, even though that this it might be more return, it's still more risky than an active strategy. So that's what we got for you for today. What we're gonna do is we're gonna shift gears, and we're gonna talk about um what's going on in the macroeconomic environment, what's going to happen to your 401ks, because I know that's always a big question. And if you got a question before we start talking, if you have a question right now, you can go in the chat or you can unmute yourself. While you have us here, and I really thank my brother Darius Green for coming in. While you have us here, with every question that you got, go ahead, unmute yourself, ask us. Even if it's one of your family members' question, they probably listening and they want to text. Go ahead, y'all, with the questions. We want to make sure we can get y'all questions before we go into macroeconomic strategies.
I just want to
Is
say
it?
thank you. This is so informative so far.
Thank you so much. And anybody else have a question? Anybody have anything that you want us to ask? Anything you want us to talk about? I know 401ks is always big. If you have it, please, we'll get back to it. We're going to take this 10. This is my fun part because I can really pick my brother brain about these questions. So brother Darius, you got about 15 minutes to chop it up with me?
Oh yes, yes, yes. I'm
Okay.
definitely free.
So just to let the people know while we're listening, we're on YouTube as well. As an investor, what are the things that you're doing right now to kind of think differently in this environment? As you know, we don't have the same privilege as our dads probably had, where they had a strategy where they could buy bonds and they were like 7 to 8%, right? And in this macroeconomic environment, we're seeing, high interest rate costs, right? You're starting to see the average person, if they're going to buy a car, it's close to 7 or 8%. If they're going to buy a house, it's around the same interest rate. What are some things that you're looking at to create a more tactical strategy? What are some of the things that you're buying right now to generate highest returns? And as the group is listening and other people are listening, what are some things that you can recommend to the group that can really give them a little bit more better returns, or a strategy to think differently in the environment that we're in today, and kind of tell the people a little bit about the environment that we're in today?
That's great. That's a great question. It also lends me to the partnership we started with Stratosphere Capital. Um, I've been looking at the crypto space as a way to hedge against inflation and to truly gain wealth. To truly gain wealth, you're going to have to beat inflation, which is going to be 2 to 3% a year, and also you're going to have to outpace the rest of the market, which is going to be gaining 8 to 12% a year. So if you're not making 15 to 20% a year on your money, return on your money a year, you're not really gaining any wealth against the common average investor. So when I looked at stuff like Bitcoin and I got into the crypto space, and I've seen it go up, on an average of over 130% over the last 10 years. I was like, this is how people are gaining wealth in this in this time that we're in. We're seeing high inflation. The market's going crazy because of the tariff stuff. People don't know what to do, and as we've seen uh, the stock market go down, Bitcoin in the last 20 days has went from $75,000 a coin to $95,000 a coin. So when everything else was in shambles, Bitcoin decoupled from the stock market, and uh, people are starting to declare it as its true worth is a hedge against inflation and a store of value. So that's one of the things I've been looking at specifically um, as it comes to a changing scene when it comes to macroeconomics.
That's very powerful. Bitcoin is a very explosive asset. We've been really trying to talk to everybody in the financial sector to let them know the opportunity that they have in this. Whether you don't know about Bitcoin or not, whether you are anti-Bitcoin or anti-digital assets or not, one of the things you have to look at is that the country is going to continue to print more money. And the reason why the country is going to continue to print more money is because there are programs and economic expansion they have to do. And again, because they have to build more programs, we know our president, Donald Trump, even though he's trying to reduce costs in the government, he's still got to spend money and he's going to have to spend trillions of dollars. And that's going to really add to our debt deficit. And what he's trying to do is restructure, right? He's trying to lower the cost of debt so debt can be cheaper. And when debt is cheaper, usually people print more money, right? And when you print more money, lower more interest, and people consume more. But then over the long period of time, it adds to debt. So if we know it is going to happen in our economy, and it's going to happen, you're going to see another recession in 8 years. My brother Darius can let you know, because all economics is about cycles. In every 5 to 7 years, almost 8 years, there's always a recession. You had the recession of 2020. You had the recession of 2008. You go down to the technological recession of 2000. You go down even down to 87 Black Monday. You go even further. And I can go all the way to 100 years. So there's going to be a recession. There's going to be high inflation, right? Inflation is always going to be a situation, not always super high, but always going to be some level of inflation, right? Where your purchasing power is going to diminish, and crypto is an alternative strategy that you can invest in to protect the money that you have. So you need to start buying crypto, whether it's just Bitcoin, whether it's Bitcoin, Ethereum, and Solana, whether it's alternative coins. You need to have a crypto strategy. I would say, conservatively, 5 to 10% of your portfolio to protect your wealth, because it's a big thing. And what why Bitcoin is so popular, and I want to talk a little bit about that with you, my brother. Why Bitcoin is so popular. Tell them why Bitcoin is popular. Tell them why this instrument is so revolutionary, because it really combats inflation. Because if we know our government is going to print more money, we have an instrument that is scarce, like gold, right? We call it digital gold. That as the country prints more money, this asset, because it's scarce, there's only a limited supply, 21 million tokens that you can buy. And as more people begin to buy the supply, because there's a huge demand of it, there is going to be a day where the price of Bitcoin is going to be so astronomical that people won't be able to get even one token because of how much money is being pumped in our economy. Please, my brother, tell them a little bit about that, because they may not know what is happening in their environment. As they're living in it, they may not be knowing what governments are doing to them and really killing their purchasing power by really killing their purchasing power.
Yes, like you spoke of earlier, the government is in debt. They're in debt to the tune of $36 trillion, and what happens is um, they have to print more money. There's a cycle. There's a debt cycle that happens in the printing of money because the U.S. government they have to they have to pay back on the interest of the money that they are printing. So when that happens, they have to print more. Say, like I always give when it comes to inflation. Say if me and you are a water company, and everybody in this group they only have $1. For us to make a profit, we can't sell our bottled water at $1. We'd have to, choose 25 cents so everybody can buy water and buy again. Uh, Now, if everybody in this group had $100 and we have the same water, but we're the only one with the water, we can sell that water for $25. So that is a very basic way to show what inflation means. So when you add more money to um, and when you add more money to the money supply, you you increase the price of everything that is bought within that system. So since that is scheduled and that cycle is a cycle, we know for a fact that the government has to print more money, they have to borrow more money, and the interest rates is, they're going to keep going higher and higher. Right now, the interest that we pay on our debt is higher than what we pay for the whole entire defense budget. So I was in the Air Force. So for the Air Force, the Army, the Marines, the Navy, even the Coast Guard, the U.S. government in its interest pays more on that than for everybody in the military service. So once you know these things, and this comes from research, you can find uh, you can find for a fact that you need to look at for other ways to make money on make your money make money for you, because this thing is going to continue no matter who's in office. This is something that is scheduled. This is how the government is built. So you're going to lose money towards inflation. The government is going to have to print more money. So you have to find a way to outpace it. If you don't, you will see what happened to a lot of people. Um, they're going to be looking up 20 years from now and said they saved all this money in their bank account, but they didn't have no money in the market, so they actually fell behind. You know, they always say the middle class is shrinking, but the people that are in the middle class who don't invest, they go to the lower class. So that's what happens on a grand scale. When it comes to Bitcoin, it's sovereign wealth. So no matter where you're at on the planet, if if you have Bitcoin, you know for a fact that it's $95,000 per coin. So uh, if you're in China, you probably can't spend it. But if you're in Singapore, if you're in Europe, you're in South Central America, if you're in Africa, no matter where you're at around the globe, it is $95,000 per Bitcoin. So that is the same reason why you'll see the governments have gold reserves, sovereign wealth. So no matter where you're at around the world, gold is going to be. I think the last report I saw is about $3,400 an ounce. So that's another way to look at it. Like, where can you go? Where can you put your money? Uh, no matter where you're at in the world, you'll be safe. That's the option that Bitcoin and cryptocurrency gives you, because the government can't stop you from using it, and you can transact with people around the world without anybody stopping it. And that's the future. That technology is the future. So it's not only just currency, it's technology. So we have to think in technology as well as monetary gain.
That's a tremendous outlook. I think as you started saying that, I really started really under like getting a greater understanding about just the way this technological wave is. And I really, if you're a listener right now, I want you to really listen to the next 5 minutes of what I'm about to say, because the next 5 minutes of what I'm about to say is really going to change your mindset. And if you really take heed to what I'm about to say, in the next 5 to 7 years, you will be a millionaire. Okay. So we're in something called a technological revolution in our country, right? In 1900s, we called it the Industrial Revolution. And so what happened in the Industrial Revolution, what happened was is that all these different products started to come out where it made it easy for Americans to be able to live. Before there was anything like an iron or a washing machine or a vacuum cleaner, like women usually had to sweep and do all these different things, but all these products made it easy for the American to be able to enjoy the life of luxury, and made women have more time, and men too, because there were other gadgets as well. Well, the same thing is happening with AI and crypto and digital assets. So if you're able to invest in this technology on the forefront, right, getting on the ground floor, with AI, with all these different things, you have the ability to be a millionaire pretty fast, like in the next 10 year fast. So if you are listening to my voice, you need to be fine about AI. You need to have a digital asset strategy, whether you're investing in an ETF like I did. You need to write that down. IBIT, SOT, ETH, ETHA, Ether. You need to have a crypto strategy. You need to have an AI strategy. You need to have a cybersecurity strategy. And my brother Darius can back me up on this because we're going into how does one company by NVIDIA makes $1 trillion in 14 months? Can y'all really think about that? What company have you ever seen in the existence of corporations make trillions of dollars in a year and some change? So if you're seeing this happen, and listen, you can go, all this is backed up, you can go see this. If you're seeing this happen, everyone who's listening right now, all of y'all can be a millionaire with small amount of money. I'm talking about like 10, 20 bands, 30 bands, because these companies are going to grow 10, 15, 20x. We bought Palantir. I don't think Lori's on here, but we bought it like $17 a share. That was the 11x situation that we made. So if you had $100,000, you made like 1.1 million on top of your 100. You know, I put maybe like think of like 17 grand in there. So I sold at like 124. So you already know the numbers there. I'm not gonna get too deep, but I'm just showing you the possibilities that you have, understanding that there's a revolution that's happening and you've got to get on the ball. I don't care what type of money you make. Take 20% of that if you can. If not 20, 10% of that and invest in something every week. Find out who's the top AI, find out who's the top tech cybersecurity, find out who got the top data center stocks. All of these things, really understand the time that you're in. I promise you, if you do this now, you'll be sitting on bands and everybody's gonna be like, how did you do it? And you're gonna be like, man, I retired myself by investing in revolutionary companies, AI, cybersecurity. And my brother Darius can really talk about just expound a little bit on it, and then we're gonna close in about 5 minutes. Just expound a little bit. I just want to let them know about the opportunity that they have here and how explosive it is. And you can share with them, brother Darius, just a little bit about the presence of the time, like the essence of time that they have right now to take advantage of this opportunity.
Yes, it's the time is now. In the next 5 to 10 years, the most millionaires are going to be created in human history, and like you said, because of the technology that's being created, the ease of life is going to be simplified. We see companies that are all putting out these robots. You know, they want robots to replace the labor force. So you never know what will happen in the next 10, 20 years. But when it comes to this opportunity, if we're not invested in these companies, we won't reap the benefits. I saw a report of the people who work for NVIDIA because they get Tesla. I mean, they get NVIDIA stock. Over 50% of them are millionaires just by having possession of those stocks. So imagine a company with over 1,000 employees, and most of them are millionaires. Like that's what's happening now because we have the technology that everybody is invested in, and what's happening in the United States is happening around the globe. So when we say that the United States has to print money, it's not because we are against the United States. Each country with a Federal Reserve or central bank does the same thing. So China has to print more money. Russia prints more money. Uh, uh, the EU, they print more money. The UK, they print more money. All this money that's being added to the money supply is what's creating this generational wealth for a lot of these people who are invested into these markets and into this technology. Because we see it here and it affects us, but once you get out and you start traveling and you see what's happening around the globe, everybody is advancing at the same time. There's more wealthy people in Europe. You know, the Middle East is developing. Africa is going to develop in the next 10 years. Like the future is here, and if you take heed, you know you won't be left behind because uh, it's all about being actionable with the knowledge that you get. It's not enough to just get the knowledge. You have to put it. You have to put it in use. And I know Apostle Lucas is he's giving you great information. This is great information.
We're going to stop there. I thank you, my brother, for just for sharing with my group and well, your group as well. He's going to definitely be one of our correspondents who's going to really let you guys know what's happening. And so we thank you guys for the night. Again, this is going to be on YouTube. If you got questions, put it in the chat. And thank you guys again. I thank my brother Darius Green, for really letting you know about all the information that's available, and really what's going on in this environment. If you didn't have a chance to really look at the whole presentation, it will be on YouTube at Next Gen Capital Club in about 10 minutes. And then there's also the link is going to be sent to your the group's Instagram page. So we thank my brother again. We thank all of you again for joining in. Please feast on this information. Send it to somebody if you think it's valuable. Share it, comment, subscribe, pass it along, because we want everybody to have this information, because this information is $1 million worth of gain for the cheap. So we thank you all. Have a wonderful night tonight, and we'll be back, like you always know, next Tuesday. Again, thank y'all again.